What's up, guys, and welcome to the channel. In today's video, I'm going to be reviewing three of the top tech stocks that you can buy in 2023 for passive income. And to start off, as you can see, my portfolio is at $49,709.14. We had an overall gain of $90.82 or 0.18% return. And guys, let's get right into the topic of this video. To this first company, it needs no introduction, but I figure I'll give it one anyways. So this is a multinational tech corporation that produces computer software, consumer electronics, personal computers, and related services. This is none other than Microsoft Corporation, MSFT, currently trading at exactly $248. And year to date, Microsoft is up 3.51%. On the 1 year, they're down 14.04%. On the 5 year, they're up 164.05%. And then on the 10 year, they're up an amazing 787.93%. They are sitting just on the bottom half of their 52-week range. However, their PE ratio is 25.54, which means that they're still a little overvalued. Now, if we go into their financials, you can see that their revenue has increased significantly year over year. And then if we go down to their net income, that has also increased year over year. Well, some low years, but overall, their net income is increasing every year. If we go to their balance sheet, you can see their cash and equivalents ends at 15.64 billion. And then if we look at their net debt, it is negative 21.5 billion, which means if they had to, they can pay off all their debt, which is always great to see from a company. And it just shows the strength of Microsoft as a corporation. Now, my favorite part, the dividends. You can see that Microsoft has a yield of 1.13%, which is actually pretty high for Microsoft. Usually they're trading at under 1% for the dividend yield. And then their annual payout is $2.72. For some reason, it's not showing their payout ratio, but I want to say Microsoft usually has a healthy payout ratio under 50%. Then they have a 5 year growth rate of 9.82%, which is fantastic. And then 18 years of dividend growth. So even though Microsoft is a little overvalued, I think I would still pick up this stock. It's an amazing company, especially at the current dividend yield of 1.13%. And now this next stock is a designer, developer, manufacturer, and global supplier of a wide range of semiconductor and infrastructure software products. Guys, if you guessed Broadcom, you were correct. Ticker symbol AVGO, currently trading at $598.58. Sounds pretty expensive. Let's look at their year to date. They're already up 8.15%. They're up 7.44% on the year, 143.85% on the 5 year, and up an amazing 1,550.8% on the 10 year. They are sitting close to their 52-week range on high. However, their PE ratio is pretty low at 14.38, so they could still be undervalued. Now, if we look at their financials, you can see their revenue has grown year over year, and their net income as well. Even though it dipped, it's continuing to grow year over year, so that's positive. That's what we like to see. If we go to their balance sheet, you can see their cash and equivalents are 12.4 billion. And then if we go over to their net debt, it's 27.56 billion. However, it looks like they can pay off a significant chunk of their debt if they need to, so it's good to see. Next up, we have dividends, and they have a pretty solid yield at 3.14%, an annual payout of $18.40, a healthy payout ratio of just under 45%, and an insane 5 year growth rate of 28.57%. And it says they have 11 years of dividend growth. But I want to show you just how crazy this growth rate is. So if we go to their dividend history, let's just scroll all the way down. In 2010, they paid a dividend of 7 cents a quarter. And then if we scroll all the way back up, and at the end of 22, they paid a dividend of $4.60. And if you do the math, that means in 12 years, Broadcom has increased their dividend by 65.7 times, which is absolutely insane. And that's all honestly almost unfathomable. And then this next tech stock is a company that designs and manufactures semiconductors and various integrated circuits, which it sells to electronics designers and manufacturers globally. If you guys guessed Texas Instruments, you were correct. My favorite calculator company, ticker symbol TXN, currently trading at $174.10. They're up 6.67% year to date, down 2.37% on the year, up 54.55% on the 5-year, and up 416.31% on the 10-year. And they're sitting just above the midway point on the 52-week range. And their PE ratio is 22.87, so they could be a little overvalued, just like Microsoft. However, let's look at their financials. As you can see, it dipped a little. However, it has been increasing the past few years. And if we look at their net income, it has also been increasing year over year. So that's good to see. Then if we go to their balance sheet, their cash and equivalents are $3 billion. If we go scroll down to their net debt, it's actually negative 332 million, which means they can pay off all their debt if they need to, which is what I like to see. Next, we're looking at their dividends, and they have a dividend yield of 2.83%, which is good. Annual payout of $4.96, a healthy payout ratio of 48.4%, another fantastic 5-year growth rate of 17.21%. And however, I do expect that this is going to go down because their most recent dividend increase was 7.8%. Let's look at the portfolio back test because this is pretty crazy. With an initial amount of $10,000, dividends reinvested, display the income. We're doing Microsoft, Texas Instruments, and Avgo, all 100%. And looking at this performance summary from the end of basically the start of 2010 to the end of 2022, 12 years, with an initial balance of $10,000, Microsoft ended at $102,828. Texas Instruments ended at $87,845. And then Avgo ended at an insane $409,101. Its best year was 93.19%, followed by Microsoft at 57.57%, followed by Texas Instruments at 46.77%. And then Microsoft had the worst year at negative 28%, followed by Avgo at negative 13.27%, and Texas Instruments at negative 9.9%. So let's scroll down to the income. As you can see, in 2010, Texas Instruments actually had the highest income at $189, followed by Microsoft at $182, and Avgo just had $38 in income. However, when you jump up to 2011, Microsoft had the highest income at $230, followed by Texas Instruments and Avgo at $220. Then if we just scroll all the way to the end, you can see in 2022, Avgo has $12,120 in dividend income, followed by Texas Instruments at $2,451. And then Microsoft came in last at $1,082. So guys, out of these 3 stocks, Avgo just went insane and performed the best in both capital appreciation and dividend income. I'm actually going to be picking up Avgo now. It's a stock that I've had on my watch list, and I'm excited to finally add it. I'll be putting money into it on Monday.